everyone, Eddie Wilson here with the Think Realty video podcast. Obviously, I am filling in for Abhi Golhar, who's your normal host. Abhi is in jury duty today. I'm really not sure how he got stuck doing that. Anyways, I get to come on and do these once a quarter or so, and I always enjoy doing them. As the founder and owner of Think Realty, I'm always interested in your feedback, and so any feedback you'd give us from the show, I'd definitely be interested in hearing what you have to say. Every once in a while I get to jump on and get to interview some great people, and today is one of those occasions. I've got somebody pretty amazing for you for our podcast. I think you'll enjoy it very much, and we'll get to that in just a second. Let me say a quick thank you to our podcast sponsor. Our podcast sponsor today is Clint Coons of Anderson Business Advisors. They're a nationally recognized group for providing bulletproof asset protection and tax strategy to real estate investors. You can go to Get Bulletproof Today, that's getbulletprooftoday.com, and get one of Clint's free books, which is Asset Protection for Real Estate Investors, and he'll provide that for you for free if you go on there and sign up. Clint's a great guy. Their business advice has been very advantageous for me, and I know it'll help you out as well. I've got a great guest today, and today I've got Jack. Jack, are you with me?
Yes, sir.
All right, man. Thanks for coming on the show today. I appreciate it. Always good to talk to you, and known you and your business partner, Fred, for quite a while. I think you guys have even been on the cover of one of our magazines in the past, correct?
Oh, yeah, absolutely. Yeah.
It's been a long time ago.
Been great. Yeah, it has been a bit while, yeah.
Yeah, we featured Dominion, I think that was 2 or 3 years ago. But anyways, Well, so obviously you guys are still doing well. And if you don't mind, just for our viewers and listeners, just tell us a little bit about yourself, about Dominion. Just kind of give us that 30,000-foot overview.
Yeah, sure. My name's Jack BeVier. My company is the Dominion Group. We are a vertically integrated real estate investment company. We focus on single-family houses. My partner, Fred Lewis, started the company in 2002. I came in 2007. So we've made it through the last downturn with a bunch of bumps and bruises. But since that time, we've built up the platform over the years just organically. Today, we renovate about 100 houses a year in kind of the Baltimore metro area in central Maryland. We've got a rental portfolio of about 700 single-family houses that we own and manage ourselves. And then we have a lending business that does fix and flip loans. And then recently, we also launched a long-term rental loan product, which I'm really, really excited about. We lend nationwide with that program. We work with a lot of the most experienced fix and flip investors in the country. That's kind of our niche. So very competitive rates, very high level of speed and service, and a good fit for your kind of professional fix and flipper.
Yeah, that's awesome. I was talking to Fred at our American Association of Private Lenders conference, and he was talking about your long-term product, and that's awesome. Awesome for many reasons, but I mean, obviously, it seems like a lot of investors have gone from, I need, bridge loan capital to I need rehab capital to now in the market we're in, a lot of them need that long-term buy and hold capital. And so obviously it seems like you guys have grown with the investors over the years based on their need.
Yeah, absolutely. I would say, I'm sure your viewers know, the fix and flip market has got a lot more competitive, especially over the past 2 years, especially even over the last year, as margins in that business have compressed. We've found a lot of our customers are deciding to keep more properties as rentals. The prospect of making a small profit on a flip versus, and then paying taxes on that versus keeping the property as a long-term rental, getting the bonus depreciation, which is a change in the tax law that's been very exciting for a lot of professional investors.
Sure.
Has been a good option. And unfortunately, the local commercial banking market is still delivering a pretty poor level of service to your typical, full-time real estate investor. And so having this non-bank alternative that has the same rates as a bank, but and can deliver a long-term, 10 or 30 years, and having a much higher level of service has become an extremely attractive product.
Absolutely.
So we're very excited about it.
And I think that the evolution of a lot of real estate investors, I mean, obviously we've had a great, almost a 10-year run here. I mean, like it's been awesome. Maybe even 11 if you got in early after the recession and the crash there. But it is interesting to me. It seems like the natural progression is a lot of people were doing, fix and flip. Then it seemed like people progressed and was like, okay, I'm still going to do a lot of fix and flip, but I'm going to buy with the mindset of if I have to hold them, it'll cash flow, to now people aren't even doing fix and flip. It's all purchase just for buy and hold. So it seems like this natural progression in the space.
Yeah, we've seen that. We've also seen people go into to small multifamily as well.
Sure.
Kind of, quote unquote, graduating to that.
Right.
And so it's been an interesting to see the market evolve. And if you set up your business to only do one thing, it'll be good for a couple years.
Sure.
But if you can't figure out how to pivot your business, frankly, every couple years, you'll just be caught on the wrong side of a particular trend.
So you guys, you guys have built a really big portfolio. I mean, you said 700-800 properties in your portfolio. Do you self-manage all your properties?
Yeah, we do. We're big proponents of self-management. I know a lot of folks, have differing opinions on this. For us, the control of managing our own portfolio is super important. We think that, frankly, no one is going to manage your properties like yourself.
Sure.
And while no one gets, very few investors get into single-family real estate investing because they're excited about getting into the property management business.
Right.
It's frankly, if you're going to try to treat this as a long-term wealth creation vehicle, which we really think it is, controlling that portfolio, we think, is like of the utmost importance.
Yeah, awesome. So you guys lend. You really made a very specific point. You said you lend towards the professional real estate investor. You're looking for those that have a little bit more tenure, that are doing maybe multiple deals a year. What is that perfect client that comes into your environment that you like doing business with? If there's a Think Realty listener or viewer that's out there that's going, should I partner up with Dominion? What do they look like? What is kind of that qualifier that makes sense for you guys?
Sure. We do work with investors who are doing on their first or second deal. We're a little bit more conservative. I would say our fastball is working with someone who does between 3 and 50 flips a year.
Mm-hmm.
That's really where we kind of excel in terms of our rates are very low, so we're a great fit for that. And we deliver a very high level of speed and service. Like, for example, we do all of our valuations internally. We don't rely on third-party appraisers. And when you've got a closing date that is less than a week out,
Sure.
The idea of waiting for an appraisal, it's just frankly not an option. So because we've got that internal underwriting capacity and we're a direct lender ourselves, we're lending our own funds. So, I can get my team can get our heads around the deal within a day. So we have a lot of investors who call us on Monday and they need to close that same Friday. Mm-hmm. That's actually what we've built our model around. We can close. Awesome. We've actually closed a loan the next day, but that kind of 4 or 5 business day turnaround becomes kind of the norm for our group.
That's awesome. And then what states are you lending in? Are you lending in the normal states that a lot of the lenders are? I mean, how many states are you lending in?
Yeah, so we're lending nationwide, except for Nevada. Nevada is the only state that we don't have a license in.
Awesome.
But everywhere else is fair game, and we have competitive programs wherever we go.
We had somebody reach out to us, I think, a day or so ago. You guys lend in North Dakota, South Dakota?
Yeah,
okay.
Absolutely.
Very good. I know those are some difficult states sometimes, so that's awesome.
Yeah, they're missed a little bit.
Well,
they're missed sometimes. But yeah,
I'll have to send them over because I know that we were looking for one in North Dakota, South Dakota. So very good. Well, now, obviously, you guys have built a great business, and there's even more facets of your business. I know you guys are in the insurance space, and you guys have done a really great job at, like you said, vertically integrating everything and tying everything together and providing those services. You also have kind of a community that you've built, and I know I've been a part of it, and I've been there, and it's a really, really solid community of some really high-level investors. So if you don't mind, talk to me about your mastermind and kind of throw out there, what type of people make sense for that mastermind, because I think a small percentage of the Think Realty audience probably would qualify. Maybe it's not something that everybody would, but talk to me about that a little bit.
Yeah, absolutely. So about 4 years ago, we started a nonprofit mastermind. We belonged to some other groups and really enjoyed them, but we found that we didn't quite think that our niche as an operator was the focus of many of those kind of groups, and also we didn't want an incentive of kind of the profit motive being in the room. We felt that for us, there's just tremendous value in sharing ideas and sharing best practices with the other best operators in the country.
Mm-hmm.
And so we wanted to create an environment where people come together. We do it 3 times a year, usually in Dallas because it's just a central location. Everyone comes in. It's a group of about 50 right now. And it's all kind of like larger operators, kind of the most, mid-sized real estate investors, people who have at least 100 rentals, or doing, 25 plus flips a year, probably at least 100 transactions a year.
Sure.
That's really kind of the category of the room. And the idea is, it's about scaling your business. It's about building, sustaining, and protecting wealth through real estate. Everyone in the room does some wholesaling. A lot of people do some lending, but it's really about the folks who are doing a lot of flips, building a larger rental portfolio, and we're really focused on the issues, people management, tax, for that a little bit, kind of next step, that medium to larger size single family real estate business. So again, we run it as a nonprofit because the point of it is about the ideas that are shared. I mean, if you're doing that level of volume, a couple of nuggets that you can go implement back into your business are worth a tremendous amount of value. And that's why we're there. And that's why we put it on as the organizer, is to bring the best operators around the country into one place so that frankly, we can go learn from them and implement their ideas into our platform.
Yeah.
And it's been really, really great. We're very, excited that it's, that it keeps going, and we've got a really solid room right now. So it's an exciting thing to be a part of. By the way, it's called Real Investor Roundtable. And if you're interested, if you think that what I'm describing is a good fit for you, just go to www.realinvestorroundtable.com. And you can watch a couple videos, see some folks who are in the room, some testimonials, and then shoot us an email there if you think it's a good fit.
Yeah, and I'm a huge proponent of that. I'm a part of the group as well. I've been there in the past, and just some really high-level people there in the room. Those that, depending on where you are, I mean, obviously, you've got people that are doing 10 times the volume that you even described as kind of the lowest level coming into the group. And so, and some multifamily guys and some big lenders. And I mean, I've met a lot of people in the room there that I've heard about and had never met in person. So really great space, and would definitely recommend that to anyone that's looking for a mastermind group of like businesses that are really doing some great things. So obviously, you've got the mastermind, you've got this great business. Talk to me about the market today. I mean, let's kind of end talking about where you think the market's going. I mean, we're in this unprecedented place. I mean, you can't go back into history and go, oh, well, based on history, we're going to go here. We've already surpassed that 13, 14-year rise that we've seen in the past post-Great Depression. So where do we go? Does it go back into normal market cycles? I mean, what's your opinion? I mean, what are your thoughts there? And then how should people react to that as real estate investors?
Yeah, absolutely. It's a very interesting time. I would say 3-4 years ago, I was of the mind that, hey, this is late in the cycle. It's been a really long time. The other shoe's about to drop. It's got to be. It's just been so long. Today, I would say that it's interesting. The coronavirus stuff that happened a couple of weeks ago is certainly kind of a black swan event, an X factor in what we're going on there. And I think it's still open for debate as to how or if that's going to have any long-term effects in this particular real estate market. I would say that the fix and flip business, obviously margins are down. So we're seeing the full-time investors having to dig deeper for deals. Sure. They're doing, relatively less deals each year because they're trying to find the deals that, that make sense for them, that have good margin in them. Those are often requiring larger rehabs or even new construction. And going into small multifamily, we're seeing a lot of the guys going into those sectors to be able to find deals that have more value. Mm-hmm. But in terms of real estate prices long term, I'm pretty bullish. And the reason I'm bullish on real estate prices is because when you look at the macroeconomics of household formation in the United States versus the aging housing inventory and the still under supply of new housing starts, we've got a 300 to 350,000 household or house deficit in that equation mm-hmm. annually. And it's really not getting better. Right. So and additionally with kind of institutional capital that's come into the single family space, I think there's more floor on the market than there's ever been before mm-hmm. because you've got larger pools of capital that are comfortable with this asset class for the first time ever. And so I think that if we saw a dip in housing prices, they'd get, houses would get gobbled up very quickly. And frankly, because they're so undersupplied versus household formation, I think that real estate prices are going to be steady up with solid appreciation for this foreseeable future. We're not seeing the 2006, 2007 kind of crazy lending standards. Mortgage default rates are at a literal historical low.
Right.
So there's just a lot of things pushing pricing in the right direction. I don't think we're going to see 5-6% appreciation like we have, at certain points in the past, 5, 6, 7 years. But I don't really see a material drop, in the foreseeable future. So it's a great time to build the rental portfolio. Again, it's tougher to do that right now with that short amount of supply. But from a risk return point of view, owning real estate right now, especially owning that kind of affordable segment of real estate, sub $300,000, sub $400,000 real estate, feels really solid. I mean, we really like that investment thesis right now.
Yeah, it's interesting. I was just talking to an economist earlier today who didn't want to be on the show because they've surpassed any data that they can point to really make solid, predictions, especially with coronavirus and everything that's going on. And it's interesting to me because, he posed a theory and he said a lot of what you're saying, and that is, if it's truly an argument of supply and demand, we don't have any supply and there's still high demand. If something like the coronavirus, like a black swan event like this, comes into our marketplace, it actually makes the market more advantageous for a real estate investor because, if prices go down a little and some savvy real estate investors have some dry powder, then it's going to create another buying frenzy, which is they're going to then capitalize on again because demand is still at an all-time high. We just saw SFR occupancy rates at 87%, highest that we've seen in the past 15 years, for rentals. So in the SFR space, 87% occupancy, that's huge. And like you said, and it seems like there is, the floor has been created by Wall Street. So how can it drop? Where can it go? And there's more Wall Street money trying to come in every single day. So we are really in just this fascinating place in real estate. And the part I love about it, and I think that you'd probably say the same thing, is that real estate's not an emotional marketplace. Like you look at the stock market and you can watch the coronavirus affect the stock market, and all of a sudden we're at a seasonable low, then we're at an all-time low, and then it's like, and then literally they're going, oh, but it could correct itself in 2 or 3 days or maybe a week. And it's like, that's not real estate. Real estate takes months and sometimes quarters to really see the effect of what anything that's happening in the marketplace, or what trends are happening, play out on the real estate floor. So it is fascinating. I mean, I would agree with you. I think it makes a lot of sense, and it's where I'm putting my money today. I'm still looking for great deals. I'm still trying to build more rentals. And I've got some powder dry ready for the next opportunity. I think there's been a lot of people that have overbought, especially in the multifamily space. And a lot of people have gotten into bad deals in the past 2 to 3 years. And I think there's people like me ready to gobble it up if it ever comes back on the market at an advantageous price.
Yeah, no, I couldn't agree more. We're thinking about that way in the lending space as well. There's been a lot of very aggressive lending that's gone on over the past couple of years. Anecdotally, I'm hearing default rates like for the national lenders are in the kind of 8 to 10% range, which to me sounds extraordinarily high.
Sure. Seems crazy.
And so I'm wondering if there's going to be some non-performing loan, non-performing hard money loan opportunities that creates a source of inventory as well, kind of busted rehab projects where someone got in over their head.
Right.
So I think there's going to be a different but very interesting set of opportunities, in the next couple of years for all the reasons you just said.
Yeah, that's awesome. It seems like the people that have their capital in place are prepared are going to find unprecedented opportunities maybe in the next 12 to 18 months, not because of a downturn, but just because of new opportunity. I feel even lending platforms that are out there that are super aggressive, especially ones that are venture based, it may be interesting to see all those loans come back into the marketplace. And, I'm a non-performing notes guy. I enjoy those as much as anything. So I'll buy those too, but anyway, so yeah, I appreciate your commentary. Appreciate what you guys are doing. How can they see more about you guys, follow along? I mean, obviously they can go to the mastermind, but Can they follow you on social? Can they interact with you on the website as far as finding lending opportunities with you guys or borrowing opportunities? How do they get a hold of you guys?
Yeah. Our lending website is www.dominionprivatelending.com. You can go on there, find out a little bit about the programs, but the most important thing there is to just get one of us on the phone. We're big about, talking to humans, people, not portals.
Yeah.
And so if you fill out a web form there, you'll get a call the same day from one of our loan officers. They can walk you through the program. And then if you think that the mastermind is a fit, it's www.realinvestorroundtable.com. So those are the two best ways to get in touch with us.
All right, Jack. Appreciate it, man. Thanks for coming on today, and good luck with the investing here in the near future.
Yes, sir. Sounds good. Thanks a lot. Thanks for having me.
Have a great day. Thank you to everyone for the Think Realty podcast coming on as a viewer or a listener today. We appreciate you joining the platform and being a part. Also want to say a quick thank you to Real Property Management, one of our podcast sponsors as well. The largest residential property management franchise in the country, managing tens of thousands of properties for individuals, investors, and institutions. If you're in need of a property manager, maybe outside of the market that you're in, you can go to realpropertymanagement.com, realpropertymanagement.com, or 888-806-7088. Make sure you go support them as a thank you for them supporting us. If you're not a part of our social media networks, make sure you join us there. You can go to Instagram at WeThinkRealty.com or WeThinkRealty. You can also go to Facebook, LinkedIn, anywhere that you are, we're there providing great information and opportunities there as a part of the Think Realty Network. If you haven't read the magazine, go to Barnes & Noble, pick one up on the shelves there at Barnes & Noble, or you can go to thinkrealty.com and download the latest digital magazine there online, and we'd love to get your feedback there. Thank you so much for watching. Happy investing.
Hi everybody, and welcome to The Breezeway, where we discuss topics that matter to property managers, owners, and investors. Today, I want to cover some of the best ways to attract renters online. I'm talking about a strategy to get as many prospects as possible to see your properties, and then convert the best ones into renters. And that strategy is nothing without this. Ooh, nice effects. All property marketing starts right here. If you're a Yardi Breeze user, you get unlimited access to Rent Cafe, an online listing service that can also syndicate your listing's photos and property details to all major listing sites, exposing your property to thousands of potential residents. So why does this matter? Because to really capture those online rentals, you're going to need lots of photos that highlight your property's best qualities. If your pictures look bad, your entire listing is going to look bad. Consider hiring a professional photographer if you're having trouble taking these photos yourself. Now, each listing is going to need a great romance paragraph. This should summarize the property's best amenities and perks in a well-written, appealing way. It's basically an online dating profile for your property. Once your marketing is set up online, I want you to rethink how you go about showing your properties, and I'm talking about live online tours. Did you know that 40% of your prospects will look for your company on social media, and most of them are going straight to Facebook? If that's not a convincing argument for your business to have a Facebook page, I don't know what is. But here's your real light bulb moment. Nice. Property managers can also schedule live showings right on Facebook. They're free, and you can post them after you're done recording. Then text or email prospects a link to that property's video. You can even use Yardi Breeze to send that link. Wow! You know where else you can advertise your tours? Your website. 79% of all renters will visit a property management website. Online tours can be private or public, but out-of-town or busy prospects will greatly appreciate the fact that they don't necessarily have to visit in person to see the property. Okay, so your marketing's on point. Your online tour sealed the deal, and now it's time to sign the lease. If you're a Yardi Breeze client, you can do that online too. E-signatures are fast, secure, and user-friendly. They're also stored in the cloud. So before we go, a final word on pricing your rentals. While undervaluing your properties is a bad idea for everyone who sees a piece of the revenue, it's just as bad to overvalue your properties and scare away renters. To get pricing right, you need to use market data and make sure that your rent is competitive with similar apartments in your area. We like to use Yardi Matrix because it's one of the nation's most trusted market intelligence sources. And that's all for today on The Breezeway. Hopefully this episode gave you some ideas on how to attract as many renters as possible online. Thanks for watching.